The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the June 17th. Marvelous Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that, well, just simply tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So I hope everybody out there had a great weekend, a great Father's Day weekend. Let's go look at one of our tools. This is the tool, well, I don't actually have a name for this tool. We'll call this the tool of persistence out here. You know, I've had the opportunity to work with a lot of folks over my life. I've worked for people. I've played on team sports. And when anyone is asked, how to describe me in a word or so. Words that are often used are words like determined, unyielding, positive, and passionate. And these words and many others are what I consider to be the wake-up call or the trigger to find the will to power through any and all obstacles out there. I know that you do that as well. And obstacles, they're nothing more than the universe testing us to see just how badly we want something. That's all that it is. And although these tests can be what we'll call frustrating, it is a necessary aspect of life. And the frustration, folks, it just simply must be powered through. And the way to do that is with our human will. Make sure that you find some word out there that just simply triggers you to move through all of your obstacles out there. Because people who fail to achieve their goals, well, they get stopped by that frustration. They allow frustration to keep them from taking the necessary actions that would support them in achieving their desires. The way to get through any roadblock, it's pretty simple. It's by plowing through that frustration. Sometimes frustration, well, it'll lead to a setback, and a setback is nothing more than feedback that each of us can learn from. Learn, and then push ahead. I doubt you'll find very many successful people who have not experienced frustration at one time or another. All successful people learn that success, well, it's buried on the other side of frustration. I say, be determined, be persistent, be unyielding, be positive. And you know what? Be passionate. Be passionate in achieving your goals, knowing that you will succeed, and then enjoy the journey to your destination. Thanks so much for making TFNN your destination. Let's go check out the destination of these markets. In fact, let's go check out the roadblocks, the frustration for the bulls and the bears out there. Let's go check out the testing that the universe is presenting to the markets right now. Testing, testing, testing. That is what's going on right now. We'll start off by taking a look at the ES Mini. We're going to look at the 120-minute chart out here. We looked at this on Friday. For those of you that are listening in on the radio or your mobile device at TFNN.mobi, thank you so much for doing that. Remember, this show will stream live to your smartphone device, pad device. Just go to the homepage of TFNN.com. Over on the right-hand side, you'll see a button with 3 little smartphones. Click on that. You'll see this chart here live. In fact, if you'd like to see the chart in HD, just go over to the homepage of TFNN.com and sign up for the Tiger's Den. You can test drive that for 30 days out there, and you'll see each of these charts here in HD. Now, on Friday, in fact, if we take a look at where we were at on Friday of last week as the market was opening, just to give you an idea, now it's a 120-minute chart out here, so we'll use the close at 9:30. The close at 9:30, even though it's 9:11 right now, the close was 16.29. We're trading at 16. 16-31 out here. So you can see not a lot has changed really since last Friday. In fact, the pattern that we are looking at, this chart here, hasn't really changed at all since Friday. So really the same thing that we are looking at. Testing. Maybe a little frustration for the Bulls, a little frustration for the Bears out here. But let's go see where those frustration levels are. You know, you wake up one morning and the Dow futures are up 110 like they are right now. That would be this morning. And then you can wake up the next morning and they're down 110. And the way that I like to describe for people to take a look at the markets here, it's nothing more. You know, it's really about Bulls and Bears. It's really about two teams playing football. And the turf, in this case here in the stock market, is nothing more than this playing field of price. And those folks that you're familiar with, whether you like football, you just watch football, maybe you're not watching every Saturday and Sunday during the season out here, but when you have a market that is up 100 points, right now up 109 points in the Dow futures, it's just one team kicking off to the other team. And then when it's down 109 points, it's the one team kicking off to the other. It's just all about being able to grab some turf out here. And when you grab turf, inside football, in order to be able to get a first down, you've got to move the ball 10 yards. Well, the yardage that we take a look at inside the stock market really boils down to three primary areas. 0.382, 0.618, and 0.786. That's how we measure with the down markers. That's how we measure where the ball is likely going to head to next out here. If you're looking here at the ES Mini, right now, the 120-minute chart, in fact, if we go from the top of the football field, that would be the high out here on May 22nd. That would be 1675.50 down to the current low of the football field. The other end zone would be at 1:30 in the afternoon on June the 6th. That level, 1591. The 618 retracement, that is the next mark that the Bulls here want to try to push the market up to. That would be 1643 out there. So that's the next level in order to be able to get to another first down. If they can plow through 1643, well, they'll move to that next marker out there, and that next marker right at the level right around 1657. If they can plow through that, well, then they'll score a touchdown. And that touchdown is nothing more than making a 100% move of a move. You see, when a football team kicks off the ball, they're kicking off in their end zone. And their end zone here, in the case of the ES Mini, that's the May 22nd high out there. That's the level of 1675. That's what would be considered a 100% move of a move. 100%, you score, you get the points up on the board out there. So it's nothing more than a football game. Now, inside the markets out here, we take a look at some of the different patterns because it's nothing more than you sitting up in the box above the field, watching out and seeing how the teams are playing. And what you're always looking for is what the offense and the defense are doing. What plays? What are the playbooks out here? What's holding? What's not allowing the ball to advance? In this case here, what the Bulls want to do is they want to advance that football. They want to get it back out, and they want to get a first down. That would take it into about the the price point of around 1642. And they may have the opportunity to do it. Last Friday when we came on the air, as Tom and I were doing the Nadex Bull Bear binary option hour coming into that 11 o'clock time frame, we saw, really it was about 10:30 or so, what we saw here, if you're watching the charts out here, you see these two blue diagonal lines. That's the descending price channel that the ball has stayed within, price has stayed within ever since that May 22nd high out there. Last Friday, coming into about the 10:30-ish time frame here, what we saw was the Bulls here try to push the ball up above that level, up above the top of that descending price channel. That could have been, should have been, a real breakout. When you get above a breakout area, what happens is you'll come back and test it. In this case here, by 11:30 in the morning on Friday, we saw that the Bulls here just simply fumbled the ball. They lost it. The Bears picked it up, and the Bears took it to the very first area where they needed to take it to, and that was the .382 retracement level. Remember, in football, you've got these markers. We're going to call them every 10 yards out there. And if you take a look at the map here, the football field of the charts out here, there's really only three primary numbers that you're paying attention to. That's assuming that you put the end zones off to the side out here. And one of those levels is .382. And you can see here, as the Bears took over the ball, the opposing team on into that 11:30 time frame here on Friday, what they did, if you go from that swing point low that was put in at 3:30 in the morning on June 13th out at 1591.75, all the way up to the high that was put in during that 11:30 session, what they were able to do was get it to that first leg of the field. That first leg of the field right here would have taken them down to a price level of 1618.50. What we saw coming into 1:30 in the afternoon was a price low of 1617.75. That's all the advance that the Bears were able to make in the ball. Looks to me like they lost the ball. The Bulls here taking charge, and what the Bulls did successfully last night, what they did, coming in, we're looking again at the 120-minute chart on my screen, and it was at the 5:30 time frame where what the Bulls were able to do was advance the ball and close above that descending price channel. Something to think about. As I said, as we were looking for on Friday, when you get above a price channel like this, what's going to happen is testing. And that's what we have seen this far. That means if it's going to be a real break, what price will usually do is come back. It'll test that area. You know, it's like the quarterback got pushed back. You know, they maybe got a sack out there, and the sack zone here inside the ES Mini is right around that 1629 level. So far, the low during this last hour and a half out here has been 1629. You can see that's where price is basically touching this level. If, in fact, this area holds, price will advance. Where will it advance to? The first level of advancement will take it up into that price area of around 1642. That is the high out there at 9:30 in the morning on June the 10th. If, in fact, the Bulls here can get some steam, where will price advance to? And it doesn't have to be today out here. Where will price advance to? Well, the most likely area is 1657. That is the next yardage line on the football field that we take a look at. And you might ask the question, well, Steve-O, son, what happens if, in fact, the Bears take over and they push it back down into that rising or that descending price channel? And that is an excellent question. And that's where it makes trading, quite frankly, here this morning about as easy as it can be. Because if, in fact, price does get back below into that descending price channel, well, where it will actually move to at least is going to be 1618.50 out here, but then could easily move down to where? That next line in the field. That would be 1608. So everything is laid out right in front of us. We get the opportunity here to watch the Bulls and the Bears, see who can take control. But right now, only having made a .382 retracement on Friday, if in fact we're going to see a breakout. And so far we have, because we've seen the breakout, and now we have seen the test of that breakout area. And guess what? Looks to me like the Bulls here, they want to take charge of the ball maybe for the next day or two, and they want to go ahead and push price up into that 1657. But either way, because we're at a point here where it's either going to break out or break down, this makes trading easy. Makes trading easy, makes being able to see the field easy, at least in my opinion. So make sure if you are just listening on your mobile device, remember you can always catch the archive of this show on Channel 9. If we take a look at some of the other markets out here, look for some clues. Right now you've got the DAX up 111 points. That's up 1 0.3%. The FTSE also having a nice morning. They're up 0.5%, up 32. Our call number is 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's check in on some of the world markets here. Let's go over to Japan. Take a look at the Nikkei, finishing at its session highs yesterday, or this morning, I should say, up 346 points, up 2 7/10%. That's what we've got up on the screen here. And as we learned here on Friday, if you were listening in on the Nadex bull-bear binary option when Tom and I were on, I specifically, because I don't have the volume on this chart out here for the Nikkei. What the Nikkei did on Thursday was push down into the gap up level here that was created on April the 4th, and as it did that, which was a support area, failed really to hold that support. The real support now would come down to the low of that bar out here. I'll put another black line across my screen on the bottom of the bar of April the 4th out there at the price level of 12,075. And again, I don't have the volume here, but the Nikkei not even close to out of the woods. In fact, here yesterday, or this morning, I should say again, closing at 13,033.12. If we take a look at the bar that it was going into from June 13th, the top of that bar is 13,050. So it needs to really get outside of that. Now, where can the Nikkei bounce to. If, in fact, our markets decide to motor forward here for the next couple of days out here, where is it that our markets could bounce to? Well, if we take a look at it, nothing more than really just a dead cat bounce inside the Nikkei takes you to 13,763. Now, 13,763. That's another 730 points out here. So it would sound like it would be a nice move when you would take a look at dollar-wise where it would move to. But all that would be doing is just, quite frankly, in fact, if the volume is low to the upside, kind of picture this. What we found out from Tom on Thursday, or Friday, I should say, was the volume at that June 13th swing point is low. Is that bullish or bearish? Well, the way I take a look at it is that now all of a sudden you've got a swing point that becomes easy to bust out in order to create a possible A to B equals CD down. Now, lighter volume as opposed to what it was going into, but boy, that would set up one heck of a nice, that would set up the type of Gartley buy pattern that we're looking for inside the Nikkei. Just like with the football here, if in fact the bulls inside the Nikkei can get enough strength, can get up over 13,763, well, that sets up moving to the next area, which would be 14,595. But you got to take one thing at a time out here. Looks to me like more likely the setup here is just simply working off some of that oversold condition here, bouncing into about that 13,780, 800-ish range out there, making a 0.382 retracement, and then setting up what could be the next leg down inside the Nikkei. But in either event, it'll come down. It'll test the lows out here from June the 13th, 12,415. 85. So that's on the Nikkei. Let's go check out some of the other markets here. Let's go see what's going in on the FTSE. The FTSE has also been a weak link, not as weak as the Nikkei. The Nikkei was about 22% off of its highs in, 15, 16 trading sessions or so. Inside the FTSE out here, nearly 10% off of its high when it made a low 2 trading sessions ago on June 13th out at 62.0571. Created a little hammer candle. That there, you could see as it was coming into that 200-period exponential moving average out there. So it creates that hammer candle, get a little bit of follow through on Friday, more follow through today. So where is it that the FTSE wants to bounce to? Well, its next level on the football field is right up here at about 64, 62 out here. So that is where she wants to, or he wants to bounce. At least that is the first level. So far intraday, the high is 63, 67. It's at 63.40 right now. And that is on the FTSE. It also needs to work off a bit of a oversold condition. How about the DAX? As we take a look at DAXy out here, the DAX is trading up towards its session highs. If we take a look at where that bounce is going to go to, if we go from the high out here on May 22nd to the low that was put in a couple of trading sessions ago, you can see the DAX is already above the 0.382 retracement. That number was 81.93. So what does that set up? That sets up the DAX moving back to at least 83.32, could even move up to 84.31. But the first area for the DAX, it's going to be 83.33. Right now traded 82.44. Let's go look at the Shanghai or the Hang Seng out here. Let's take a look at the Hang Seng. Hang Seng here had completed a 1-to-1 A to B equals CD. It did that on June the 13th out here. Now what we've seen here inside the Hang Seng, not a, it's got some real resistance. Now, the Hang Seng was off for a holiday for at least one session out here, where the Hang Seng wants to move up to. Had a nice trading session overnight here, and what we'll find out is whether or not it can close inside the low of June 11th. That price is 21,307. If in fact it can, its bounce inside the Hang Seng, we ought to take it up to about 21,737. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 137 points, trading out at 15,207. S&P up 14, trading at 1640. Composite up 29 points, out at 3452. Russell 2000 up 8 points here, trading out at 989. Leaders in the clubhouse, we got Netflix up $11 and change, up a nice 5% this morning. Tesla Motor up 3%, up $3.31. Amazon, amazing.com, up a point here. Up 3 points, 1%. IBM up 2.46. That's up a percentage point. Goldman Sachs up $2.27 out there. You've got Apple up $1.70. Google is up $6 right now. Intel up 30 pennies. That's up 1 2/10% out there. Microsoft up 42 cents. Cisco having a nice morning, up 2% right now, up 47 cents. To the downside, you've got Terex Corp. TEX is the ticker symbol, off 13%. Looks like on some lower guidance out here. We'll certainly peek in on that stock chart. Medivation, MDVN. 5% off $2.47. Time Warner Cable, TWC, off about $1.74. ARM Holdings, ARMH, off $1.72. United Rentals, URI, off $1. Otherwise, everything is below the dollar area. And on my chart here, as you're watching us on Tiger TV, it's the 30-minute chart here of the ES Mini, and looks like a little bit of a breakout here is trying to ensue. All it needs to do is get up and close above the 1635 level. At 1635, that's the high that was put in at 10:30 on Friday out here. So if we can see the ES Mini close above that, that sets up this other pattern here, this 1.272 butterfly pattern. That's on the 30-minute chart here for the ES Mini. That says that price will rise to about that 1656 level as well out here. But first it has to do its thing, which is close above 1635. So far, the intra-session high is 1636. It's trading at 1634.50 right now. Let's go start taking a look at some of these stocks here that are popping and dropping. Let's go see what they are doing. Let's start off with Tex-Mex out here. Actually, it's just Tex, but I like Tex-Mex food. So Texera Corp. Let's see what, in fact, they do out here. I'm not familiar with them. They are, they operate as a equipment manufacturer of specialized machinery products. It's aerial work, aerial platform, segment design, manufacture, refurbish, service, and market aerial work platform equipment, telehandlers, light towers, bridge inspection equipment. In any event, they have guided lower out here, and they are truly getting the kibosh. Looks like I must have done some work on this at some point in time for someone. Or maybe it was just simply a stock breaking out or breaking down. So let's take a look at Texera Corp. It is down 14% this morning and trading into a swing point. So let's go see, in fact, what it is doing. Give me a moment to put this up here on the chart. So we're taking a look at volume-wise already. Big volume to the downside, 2.5 million shares. And it's going against a area here, that swing point area, I should say, from April 19th. That only has 2.2 million shares. The low there, 26.90. Man, if it breaks that, then we'll take a look and see where it's going to. Right now, you've got some bulls here stepping in, trying to hold this thing up. But, boy, the volume so far out this morning suggests maybe not. And let's take a look at where this had a couple of, how about this? This is nasty. The original breakout on this thing takes you all the way back to July 26, 16 million shares out here, and that was at a price level, folks, of $18.46 down to about $16 and a penny. It's trading at $27 right now with a lot of volume coming out of it. That was 16 million shares on that entire session. So far today, 2.6 million shares in only 8 minutes of trading. That spells trouble in River City out here. Where else can this thing hold as a support? Well, you got a little hammer candle out here that was tested, a high-volume bar back on October 25th, 2012. 6.5 million shares there. 2090 to 2191, that will be an area that will be tested. But this thing does not look very good at all. Yes, it is moving into that extreme oversold territory, but looks to me like it's going to take out this swing point here from April 19th. It's certainly doing it with volume. Any close below today, 2690, most certainly sets up running down to its next swing point, which really gets you back into that hammer candle that we were looking at from October the 25th out there. That is on Texera Corp. Let's go check in on Netflix, see what that is doing. That had a heck of a run. Let me see if that is even on my existing charts right here. So we know that has had a great run. Now I don't see Netflix right here, so let's go ahead and let's put it up here. NFLX is the ticker symbol. So let's go take a look at Netflix. We can see here that it is, okay, I was doing some other work with it over the weekend, so I know that that is, I was working on a special report that I'm sure that will get out maybe as early as today, but sometime over the next couple of days out here. And this is a special report, folks, that you are absolutely going to want. But let's not talk about that. Let's talk about Netflix and see what it is doing out here. Right now, gapping up today. Volume behind the move so far, 756,000 1,000 shares out here. Let's go see where it's going to run into a little bit of resistance. That real resistance is this bearish engulfing May 16th candle, key reversal session with inside of Netflix out here. That was as it was in the very overbought territory. So the low there is 235.20. Looks like that is where it wants to head up to as we go from the high of that session down to the low that was put in on Thursday of last week. As we take a look at the ball moving across the field, gapping up above that .382 level. The .618 is 232.39. The .786 retracement is 239.63. So it wants to go tag that bar from May 16th out there. That is on Netflix. Let's go take a look at, let's see here. Blue Nile. So Blue Nile, N-I-L-E, they are out here. Let's see. Bud is asking if Tex-Mex is on the juice diet. Bud, it actually is. It's that blue, what's that, blue agave or whatever that plant is. It's the tequila version of the Tex-Mex that I actually like out there. But now let's go take a look here at Blue Nile, up 7% out here. NILE is its ticker symbol. So let's go see. Now, these are the folks that sell diamonds over the, or I should say jewelry, but they really got into the business of trying to be a change in the markets out there, being, what do I want to call it? I want to call it, well, just simply changing the dynamics of being able to buy jewelry, buying diamonds over the Internet. So this thing is gapping up this morning. I don't see any news behind the move out here, but it is gapping up. And volume-wise, not too shabby so far, 138,000 shares. That is, let's go see where this thing is moving into here. Now, Blue Nile, if you take a look at this thing had gapped up on major volume August 3rd. So let's first take a look at that level. I'm going to draw a black line across my screen out here. And this is a level, big volume, for this equity, I should say, 1.8 million shares here, and it gaps up on August the 3rd. Now, that gap is very important. Why? It came back and it tested that level on February 13th with 1.3 million shares, and that area held. You can see it closed right above it. That is an area of support for sure, and now what it's doing looks like it is making an A to B equals CD. Let's draw that pattern. Maybe it's even completing it here. The 8 point being the low of that February 13th level. Again, this is on a much shorter term basis, just looking at the data I've got here. And you can see this morning gapping up into that the 1.272 area. That says that really what it wants to do is make that 1 to 1.618 A to B equals CD, taking it all the way back into its highs from September 14th. That level being somewhere between 43.54 to 41.54 out there. Let's see, has it even hit it? It has not hit it out here, but Blue Nile having a nice morning. Let me see if we can find anything else out here. Okay, so now you just pull it back a little bit further. Now we can also see the resistance that it's going to run into. In fact, it's sort of running into that area here today. And that resistance, that's why, you got to pull it further back to the left here. And the resistance area that I'm looking at here, guys and gals, is the February 16th area. This thing gapped down with 2.7 million shares on February 16th. And the top of that candle, which is really held as the resistance line, so let's draw that across the screen, and that's really where it looks to be headed to. So it's going to run into some major turbulence as it completes this move out here, and that was from that downdraft and the top of that bar on February 15th where it broke down from. Remember, on the bullish side, what we teach you is how to buy a breakout, which is exactly what we were really looking at first inside Nile. Blue Nile Inc., N-I-L-E, is the ticker symbol. And it works the exact opposite way as it comes into a breakdown area. And so you would want to consider now, I'm not going to play this trade here at a $42 stock. I prefer to take a look at stocks that are more expensive than $40, especially one in this case here that has traded as high as, $105 here. So now if we take a look at Blue Nile, though, it's going to come into and run into some turbulence here as it gets into that area where it broke down back in February of 2012 out there. Let's go see here. What else do we have? Now, let's go back and let's check into the let's go back and look at that 120-minute chart out here. here inside the ES Mini, because right now you've got the Dow's up 158, S&P is up 14. Well, here's the 30-minute chart. So on the 30-minute chart, we can see here, and you've got some nice volume here this morning, breaking that 1635 level. So looks to me like we've got a real breakout. And what really gave us that clue in taking a look at today's session versus Friday. Friday we had a failure. You know, when you're on a 120-minute chart, what it means is you got to wait the full 120 minutes in order to be able to get your piece of information. And as we saw that breakout occurring during that 11 o'clock session out here, that actually failed by 11:30. Now what we saw here in the overnight session, coming into 5:30 this morning, we saw a real breakout as price got above that level. And interestingly enough, 1629, that was what I put in my newsletter as the likely low, the likely test that we would see. And that's what came in during that 9:30 session, got down to 1629 even, and now we are seeing that breakout. That breakout here, which is real, and you can see on the 120-minute chart, it is not in overbought status or condition out here. We should see a move all the way up. Not today. We're not saying that it's going to, no, not that it can't. I'm not here to give you the timing. What I am here to give you is just simply the next price area. Now, remember that next price area, the first level, that 100% move of a move, well, that's what's going to take you into that 9:30ish session, right around the 1642 level. Of course, you can say, hey, Steve, if they score a touchdown, they do a 100% move of a move. How do they get to that 1.272 level? Well, folks, the bulls here right now, they're behind the 8 ball. They're behind the 8 ball because the trend, which is your friend, is still down. So what they're going to have to do when they get to that 100% move level, they're going to have to do what any good football team would have to do as they're trying to, win, because we're sort of in the fourth quarter here, and that means they're going to kick an onside kick. And if they can recover it, that onside kick, that's how you get to that expansion area of 1.272 out here. So we are seeing a real breakout here occur inside the ES Mini. Now let's so now that we've got that out of the way, in fact, let's go take a look and see what's going on inside the metals marketplace out here. Inside metals right now, you've got gold back $2, silver off just slightly out here. So this is not too enthusiastic. When we take a look at gold here, just small-bodied candles, just trading with inside that swing point from April the 16th out here, truly having really worked off that. Take a look at this. Gold here, as it came cascading down on April the 15th, got into that extreme oversold territory, and as we know, that needs to be worked. That condition needs to be worked off. That's in fact what it has been doing really ever since that time frame here, has been working off an oversold territory. It's going to come down and test that 1321.50 level. The question is it just simply going to be a test? Is going to be a test on light volume and hold, and that might be your trigger point, or is in fact going to just simply build enough energy to bust out those lows out there. Right now, gold really, other than just taking a look at it, doesn't seem to me to be much of a trade set up there that is worthwhile. If we take a look at silver, and the silver here, still have that weekly chart up on my screen. I have not updated the commitment of traders data, so what you're looking at on the bottom is, I did look at it, I just haven't updated on my chart. It's not an automatic thing out here. Still, the large commercial entities are absolutely taking positions that gold and silver is going to form a nice bottom. We're just trying to identify where is that target area. Inside silver, the ideal spot is right around $17 and change. Maybe $17.35, but somewhere right around there. And what did stop silver in its place was that 1.618. That's where the in this case here, the Bears were able to kick that onside kick and move it down to that 1.618 expansion area, getting down to the low of $20.25 the week of May 24th out here. You can see on the weekly chart, nothing but very, very small-bodied candles out here. Last time we saw this was all the way back up here during the time frame of March of 2013, March 1st, all the way through the time period of March 29th. So if you take a look at that set of small-bodied candles versus the one that we're building here right now, looks to me to be eerily similar out here. That says to me we should see silver down around $17.35. That's when you want to go ahead and maybe take out your gunpowder and fire away. Let's peek in on natural gas out here. Natural gas right now having a nice little bullish engulfing candle out here, but really the better trade set up on nat gas is at the bottom of that rising price channel where it'll also run into a nice 0.618 Gartley buy pattern, right around $3.60 or so. 877-927-6648. Dow's up 167. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Life is what we make it, folks. So let's make sure we make it a good life out there. Right now, the Dow's up 159 points, and Medivation, it's down 7%. The ticker symbol on this is MDVN. So let's go take a look at this here. Trading out right now at 47.25, taking on a swing point out here from May 23rd. Had 1.1 million shares. So far this morning, 1.2 million shares as it takes this level out. But let's go see where Medivation could likely head to as we pull this stock chart back. It actually doesn't look too bad at all. Coming off of its lows back here in the 2000, well, if you take a look at its low, it looks like the low was put in maybe around the middle of June 2010 at a price level right around $4.39. It's at $47.50 right now. So it does not look too bad as we take a look at this equity. Of course, the thing that looks bad on it, quite frankly, is if this ever does fall out of bed, it is a high-volume bar from November 3rd, 2011 that would have me a little bit frightened out here. Why? Because 28 million shares down there, and that level has not been tested. So I don't know what was behind that move, if there was a change in corporate structure, an acquisition, or something like that. That would be something that you would want to know if you were inside this equity. If, in fact, that's what took place, a total change, then that gap never necessarily has to get tested or filled. But that is something you want to always make sure that you keep your eye on. Now, as we take a look at this equity, we draw a few lines across the chart here. We can see this thing has really been consolidating for quite some time period. Really, that consolidation area began right around the middle of May in 2012. And as we take a look at that consolidating pattern out here, you're going from, we're going to call it the lows of about $43.16, I suspect. That is where this wants to pull back to, especially being able to take out its most recent swing point here. Or that's what it's trying to do today, right around the 47.25-ish level. It's at 47.62 right now, but it looks to me like it just simply wants to come back to the bottom of the consolidation level. Now, why is that important? What would be nice is if it can come back there on less than 1.7 million shares out here. 1.7, then you had 991,000 test that area on November the 9th. You have a pretty decent range out here. You're going from $43 up to about 58, or at least what you're going up to is the last set of major swing points out here on April 19th, which is about the 55 level. So 55 to 58, and you're looking at about 43 out here as the bottom of that consolidation. Now, what is it that we can look for as a signal, if in fact that's what this equity here wants to do? Well, just take a look at each time that it has now come back into this area. Now, the consolidation, most certainly, that went ahead and that started, quite a while ago, whether it was June of 2012, May 2012 here. But on the last two tests, what we saw out here or some nice bullish candlestick patterns, and that is exactly what you would be looking for. You had a nice bullish engulfing candle as that consolidation level was being tested. That was on November the 12th of 2000, November 9th, I should say, of 2012 out here. And then the last time that area was tested was on March 27th. Had a nice little bullish engulfing candle as well on, let me make sure I give you the right day here, March 27th out there. So you would be looking for some other type of bullish engulfing or maybe a hammer candle, some type of reversal signal as it came down into this area, and then you might have a nice trade. Now, what you want to be careful of is what is the volume, because you've got this little gap down here, and that would set up a normal resistance area here. But if volume dissipates and it comes back in here with lighter volume, and I mean lighter volume than 1.7 million shares, ideally 900,000 shares, might be a nice trade setup for you. Folks, it is Marvelous Monday. If you're off to start your day, have a fantastic morning. Always remember, you have an amazing power within yourself, and that power, it's so strong that it'll create a life of abundance, cure incurable diseases, paint magnificent masterpieces, most of all, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Monday, folks. Look forward to seeing you soon.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.